JB here. Hope everyone's doing outstanding. Friday, December 27th, 3:32 on this last Friday or trading Friday of 2024. Actually, it's the last Friday of 2024 and the last trading Friday. Talk really quick about the market, some names I'm looking at, and go from there. But first, just I put it out there earlier this afternoon. I've been talking about it a couple times on the rants over the last couple sessions, but still working on my top five stocks for 2025 webinar. I'm hoping to have it out this weekend. If not, it'll be Wednesday, but we'll see. I'm working to get it out. I just don't like to just get it out there and rush it out if I don't have five quality names. So I listed the names here, and they were actually looking much better heading into November, and then December a sell off in some of the smaller names, the Star Surgical, GPCR, which fell with the rest of the GLP-1 space, MTH with rates not descending like you would have thought they were since September, going the opposite direction, not good for the home builders, things like that. But then on the flip side, strong names, Sterling, just a monster on with tailwinds from infrastructure bill passed a couple years ago, and also Agilysys, which is kind of like a hospitality platform enterprise. Unfortunately, the average I think it's 18 point something percent versus the S&P's 25, so underperformed the S&P. But next year's another year, so we'll see how things play out. But that'll be coming out in the coming days. Yeah, so that's that. So that's the top five stocks. So now from markets here today, and it's funny. It's like when we had that big sell off on Wednesday and Thursday, or well, Wednesday, it was like I use that analogy like the seal has been broken. Right now, after such a long period of tight trading ranges from the end of November and into middle of December, all of a sudden we had that big pull, and it's like, okay, now the market is ready for bigger pulls. The normal tight trading ranges is kind of gone, and people are like, okay, now we can expect bigger trading ranges. So uh, either way, the headlines are saying, oh, folks are rethinking the Santa Claus rally. It's funny if it's going up. Oh, Santa Claus rally, great for markets. Oh, they're rethinking the Santa Claus. I don't even know what that means, but that's some of the headlines that I see rolling around. Yeah, I mean, yields are up a little tick, and then you have to think that we're still at the end here of tax loss selling. So people, and take a look at some of the names that were really taken on the chin right after the open. It was the Magnificent Seven. So are people starting to taking some of those profits off, and then it becomes that snowball effect as it starts to sell off. People say, "Oh, why is it selling off? I better lock mine in," and then it just keeps going until we find the bottom. I'm hoping that's the case. And then on the flip side, then some opportunities. So as they free up cash, then you start looking for the names that have been oversold. So hopefully that started the part of the tax loss selling circle starts to play out over the next couple of days. And that's why I like some of the names into 2025. Solar Edge, which broke under 14 here today. Still think that one goes on a tear at the start of 2025, and some of these other names. All right, so take a look at the SPY. Hit down to 590 before bouncing. The VIX in the green here today, and then the amount of stocks trading over their 50-day moving average still higher than where it was last week, but took a little dip to the downside. So now it's back to 25% of stocks on the S&P trading over their 50-day moving average. Hopefully just a little aberration, and it heads to the upside. So that's the overall market. I mean, next week we only have two more trading sessions left, and then it should be exciting. Then we have 2025. So back-to-back S&P 20% gains pending any crazy shenanigans. The S&P is still up 0.5% for the week. So despite today's sell-off and what would be construed as some volatility, still not too bad a week, all things considered, from the previous week. All right, so now just on to other names. And I've been doing some tweets and posting in the chat room in regard to TripAdvisor, because the more I look, the more I'm like, wow, number one, I think it's undervalued. Number two, I think it's ready to rally. And number three, I think it's a solid M&A candidate, right? So just really quick, so just a little backstory, and I'm just putting the little links up here for Open Table. But Open Table back in I think it's 2011, 2012, 2013, I used to trade it a lot because it was a name most people didn't understand, even some folks here in the chat room, because it's a reservation platform for restaurants, and if you don't go to restaurants a lot, it's a useless platform, right? But yeah, and not that I say go out a lot, but I used to use the platform. I mean, I still use it, but used to use it, and I knew kind of like the great case for it. Not only is it good for restaurants, but it's good for the consumer, and then obviously it's good for the company. So when you have a product like that that's good for all three parties, it's usually a good a good business model. And then as long as there's no competitors that encroach on the space, uh, or at least you're entrenched enough to have a moat, it does well. And so they did, and that was kind of my bull case on the name, was that I thought that they're pretty well entrenched. It becomes a platform of choice. They kind of like, I would say, forced restaurants to be using their platform. But if you want to be a successful restaurant, similar to now how after well, Uber Eats, DoorDash, Grubhub, Postmates, all those platforms. I don't know if they were around then or just maybe in their infancy, but it's similar to that. When you're ordering food on one of those apps, if you're not part of that ecosystem, someone's going to go to a different restaurant, right? I mean, they're going to get their Uber Eats order from some other place because your name's not listed as some of the options to browse. So that was kind of it. Anyway, so rant for another day. But you can see my comments there, and this is one of the I did a post back, I guess 2004, talking just a little about Open Table and saying, hey, it's a $1.2 billion market cap. It would not be a stretch to think it is a buyout candidate, right? So then fast forward into 2020, 2014, and I've been trading it in and out, and then I got some calls into the Apple's developer conference. So I think it was coming in at, at start of June. So I got some calls to play for, inexpensive ones, risk reward, right? And the story goes is that they were bidless going into the buyout. So then one morning you wake up and there's Priceline, and now it's Booking.com acquiring Open Table for 2.6 billion. At the time, Open Table was only doing $220 million in revenues. So pretty much just trading 13 times revenues, at least at the acquisition price, and a 50% premium. The stock was at 70. It got bought out for $103. I got like 12 or 14 calls, like $280. And after the buyout, they were 30 something $1,000. So nice. It was a great week, right? And then a lot of other folks who were unfortunately kind of like stuck in the trade because the position was bidless. There were a lot of other folks who made some nice coin. I probably could search the chat room and post you some screenshots. But anyway, that's history. That's almost 11 years ago. And here I look at TripAdvisor, and they have the same kind of platform, but this is in Europe, and it's called The Fork, right? So the Fork does $170 million in revenues. It's growing 16% year over year. And it's a reservation service over there for restaurants. And here we are. We're looking at TripAdvisor, and TripAdvisor is just valued at $2 billion. So I'm not saying you use the same valuation, because Booking.com actually had to write down some of their investment in Open Table, I think to the tune of $600 million. So maybe it's $1.7 billion valuation. That was at like 2 years later. So I'm not saying it's apples to apples, but to me, it just shows, you look at all their segments and it just it looks bullish to me, right? And so even without the M&A possibility, and then you look at the TripAdvisor brand, which again I keep saying, I've been saying it for years. It's the top travel website on the planet. They pretty much were 90% of the revenues for the company back in 2015, but now they have their Viator. I don't know if that's how you pronounce it, platform, which has creeped up from 7% of their total revenue in 2015 to nearly 42%. It's grown 16% year over year as well, same as the Fork. And the thing with the Viator or whatever, it's a reservation service. So it's like not a reservation, but for experiences like excursions, travel, events, things like that. So that's the platform for that. Whereas this TripAdvisor is more of a review website. So anyway, I can go on for a little while, but you start pulling it back, and I posted again in the chat room. The CEO of Expedia back in the day, he was there 10 years or a little more than that. He was part of Expedia when they spun off TripAdvisor. So Trip was spun off from Expedia. So that happened. And then he got wooed into taking over Uber when the Uber CEO was doing horrible. I forget there was a whole thing right before they come in public. I guess it was doing bad at the road shows, whatever it was. So he became CEO of Uber. And part of his vision for Uber was to have a super app. So not only just to ride hail, but while you're in your Uber, and some of this has already come out, with the Uber Eats side, but you're in your Uber, they could stop and get your McDonald's order. And then now you can do travel. You can book travel, book excursions, pick up your beer, wine, liquor, things like that. So they wanted to be an all-in-one encompassing app, and they're still on that journey. So some of the rumors back in October was that Uber was going to acquire Expedia. Expedia is a $20 billion company, so I don't know what premium that'd be. And I think Uber's $180 billion. But that kind of got nixed, and now you start looking, and it's like, oh, well, here's TripAdvisor. Again, same with Expedia. Expedia was Uber's old company that he ran. TripAdvisor was his old company he ran too before it got spun off. So there's a lot of synergies there. And then you look at the TripAdvisor members. They have the trade desk. One of their executives, another executive did a CFO assistant on Booking.com. So there's a lot of synergies there. So I mean, I could go on a rant for a while, but the more I look at it, you also look at seasonality too. And the last 2 years, and I've already said this, it's been on some massive runs to start the year. And last year was no different. I had the calls, made some nice money on the calls. Happened in 2023, and I'll have to go back and do some more historicals here. But not saying the history is gonna it's gonna repeat itself again into 2024, but I think 2025. But if you start looking at the math, the earnings, and their past earnings, phenomenal. So and then the last piece of this was that Liberty TripAdvisor Group was a stakeholder, right? They had a 21% stake in Trip, and they had a 52% controlling interest. I don't know how that all worked. So pretty much anything that Trip wanted to do, which would include M&A, had to go through the Liberty TripAdvisor because they owned that stake. So then just recently they came up with agreement, and Trip bought out that stake, 21% of the outstanding share count, which is 27 million shares. They bought back at pretty much at an average of $16. So the stock trading at 14.56. They just said, "Hey, we think the company is at least worth 16," and they think it's worth much more. But now they kind of got that hurdle out of the way. So not only did they acquire the shares, but they're going to retire them. So it's a pretty much 27 million share buyback, right? Stock buyback instantaneously. That'll happen, be effective next year, and then it also removes the overhang. And I think some of the reason there were rumors they were going to get acquired by Apollo Group back at into I think it was announced in February, and then in May for I think the rumor's $28 or so, but then that got nixed, and I think some of the reason it got nixed is because the controlling group nixed it. And then what's ironic enough, the stock got cut in half. I mean, it's half from where it was, and they're getting bought out for much less. They should have taken the deal, but I think it just opens doors for more strategic alternatives here. And the other option here, and another possibility for another driver for the stock, is they do a spinoff of the fork, right? So I think they have a lot of levers to pull. They got the overhang done with getting this controlling interest out of the way, and really bullshit name. All right, so too long a rant. Probably could just made it a TripAdvisor rant, but really like that one. Added more strikes today, and I'll continue to look for opportunities to play that one for upside. All right, that's TripAdvisor, and then some other names just disappointing today. United Healthcare, pretty much right at the 10 o'clock hours when everything kind of hit the fan, and United Healthcare was hitting highs right at 10 o'clock at 5:13, and then within a blink of an eye, it wasn't even a chance to close the last of my call. So it's sitting here at 508, and you look at the chart, and United Healthcare actually doesn't look too bad here. The premiums are high into next week, so I'll just wait, but could be another speculative trade at some point next week for a move over 520 for a bounce. Lemonade, so disappointing. It looked so poised. Even at the pre-market, it looked like it was going to break 45 and just take off. And then just came under pressure. It's down 11% here today. Still in that channel there on the bull flag. So as long as it doesn't break below the downtrend, it should be good to go. Breaking below the downtrend would negate the possible will probably cause it to fail that formation. If it breaks above, it confirms it. Not much to say here on Joby as well. It's down 3%, but all things considered, still up 15% on the week. Would like to see it break 933 and close above that, but we'll have to wait till next week. Still looking for some strikes here, but it doesn't make sense to add anything here today with the market being a little queasy, right? We could have some follow through Monday. Who knows? I'm not going to rule that out, especially if over the weekend we get some major pullback in Bitcoin, which is going to happen, whether it happens at 100,000, 120,000, 110,000, 150,000. And then all the panic fear folks will start coming out. All right, so that's Joby. AMD also looks pretty good here today. Just went to the green earlier. Still watching that one, but I'll wait till next week on that. And then some of the names I was looking to get on the put side. You look at Decker's only down 1% here today. Intuit's down a little more, under its 50 days still. But I'll just, again, be patient. The thing is, last week when we had the Fed Chair Powell induced sell-off, there was a plan for puts, right? So if we broke 600 on a SPY, I was going to be open to adding some puts. I didn't think it was going to happen, but I had that as a plan, and then sure enough, we did. This week, as we start to bounce, I figured some chop 598 to 602 or so, and then once we start melting, but by the time I started to look at some puts, some S&P's already down over 1%, and then the names that I would normally look for put hedges, Palo Alto, Lam Research, ServiceNow, those were already off 2 to 3%, and then the premiums were already jacked. So to me, I didn't think we were going to break much further. And if I did, it would have to be 2% or so downside to make some money on some of these spec lotto hedges. So I just sat on my hands. Um, anyway, that's it, folks. Let's have a great afternoon. I'll be back, or have a nice weekend. Rock and roll. Last weekend of 2024.